Abhishek, that's something which you mentioned in your opening statement, that is this an obligation or is there money to be made? Is this the good business proposition? Even if we don't talk about rural areas, as Mr. Purwa said, even if you look only at urban areas, is there a business proposition for new banks and private banks to reach out to the unbanked?
Urban, there is. There clearly is a very big proposition because the accessibility is better. Because there are two aspects of costs. One is the cost of delivery, and the other is the cost of recovery, primarily. Now, if you look at the cost of delivery, what's happening now is people are realizing that when you try and service the upper end of the corporate world, you're actually noticing that there's too much competition over there and margins are thinning out. So most private banks or even the foreign banks, they actually are saying that let's have a more bottom of the pyramid approach. So there are institutions, they've actually hired chartered accountants who actually get people to enroll for PAN cards so they can open bank accounts. This is a very good proposition to be had because what you're doing is you're trying to get them attracted to the system.
So there is a business proposition in the metros but not outside?
No. There is one outside for a different set of people in the ecosystem. It has to be governed.
Yeah, I like to actually debate that point a little bit. We have been looking at the business models all around the world, which have evolved in the last 3, 4, 5 years. There's an organization called M-Pesa in Kenya. Now, they have evolved a great money transfer system, which then has backs into the banking system. And how have they done it? Technology, mobile technology. If you ask me a single invention after ATMs, which is going to move banking forward, is this handheld device of mobile.
Let me ask Ankur on this point. Ankur, do you see a challenge on using it? It sounds very good to say that you can bank on a mobile, but what are the key challenges you see and what are the hurdles to make mobile banking more successful?
I think the first thing is we should look at who the customer is and what is the pain point, right? The customer pain point is he has to travel some 20 kilometers to make an electricity bill payment, or he has to go some 30 kilometers to do a wire transfer. So in the rural heartland, actually he is not connected. And the cost for him to do a transaction is far larger than the cost of doing the transaction sitting in a city. Also, the second thing which we need to look at is how we can reduce the barriers to entry, how we can simplify the process. So technology will
Let me ask Mr. Purwa to address
the device.
Uncle, let me ask Mr. Purwa to address this because they've done it in the good old-fashioned way, and now with technology coming in, what are the hurdles you see on the ground?
You see, let me counter it by saying that when we were doing the ATMs and the core banking solution, the point which was being repeatedly asked was that is the core banking required in rural areas? And the point being taken in the bank was that a customer in a rural areas is entitled to a world-class service, and therefore it has to be provided to him. And we have seen the success. People were very reluctant to set up ATMs in rural areas, saying that rural masses will not use it. It has been proven other way. Rural masses as much use it as, I personally feel that, if technology is provided to the people, they would definitely make use of it because of ease of convenience.
Right. We'll take a short break over here. Once we come back, we'll talk about microfinance. We'll also talk about the concept of business correspondence, which the Reserve Bank has introduced, where a lot of the banking and financial activity is taken by a set of companies who traditionally have not done or done a lot of financial activity. We'll talk about that when we return. You joined us for a special discussion on financial inclusion. With me is a special panel of experts. Abhijit, I want to ask you, the whole concept of business correspondence, where banking will be extended to a completely new set of players. Again, the issue which you have raised and we have discussed over here, that delivery is easy, but collection is a problem, especially when you're talking about financial products. How can that be addressed? Can business correspondence as a scheme do that?
Business correspondence, in my view, can actually address the deposit situation very well. Collection of deposits, mobilization of deposits. because they can create the awareness.
But
and they
even
incentivize
let me come even to the delivery part of it. How will that operate?
So the credit delivery part of it, I think it's going to be synonymous with the DSA concept that was existing earlier.
So
or
is
still
it
exists today.
in the view of a lot of people, if you have a small shop which is selling a SIM card, which is selling matchboxes and a lot of FMCG products, will that outlet be actually delivering a financial product?
They can deliver a deposit product. I'm not very sure whether they can even deliver a credit product. I'm not sure whether they can recover a credit product.
I agree with you. Delivering credit product is easy. Easy part of it. It's the collection back.
But that's tough for in any system.
No,
right?
but for collection, you need training. You need credit evaluation. You need controls. You need to have a system which provides credit to credit worthy and a system for collection, which I think is significantly different than a deposit
What
product.
the banking system does not realize is the collection of credit from a rural mass or an previously unbanked mass, let me put it that way, urban or rural, is much different from traditional collection.
Only thing I'll add is that, and I have had a lot of experience in microfinance. I'm chairman of Bellwether Microfinance Fund, and we've supported 18 microfinance organizations. What I have learned is that whether it is the social or ethical framework amongst the poor, whether they are urban poor or rural poor, is such that they are inclined to pay back. They think it's their duty to pay back. So the bad debt experience amongst the lower income people is much better than amongst middle income and higher
But even
income.
so,
Let me support what Mr. Duggal has said, that if you work out the rural credit delivery or the microfinance credit delivery in a proper manner, it is one of the best paying propositions in the system. And correction is also not an issue. Problem is that the DSA model, which was experimented by some of the banks, and some banks in our country have burned not their fingers but entire hand in the process. So that particular model has its own limitations, and therefore the model which we should think of, it should be
so delivery has to be linked very
Yes.
clearly to collection as well.
That's right.
Now, do you suggest a change in the policy or a law which will enable this to?
I don't think so. I think there are enough failures already in history, recent history, both domestic as well as foreign institutions like City Finance and GE Money and all that, who lost tons of money by making those mistakes. Now, there are successful models of credit delivery. I think our microfinance ecosystem has worked very well. We in Shriram Group have a very unique model of relationship credit. Our branch managers make the loans, they administer the loans, they collect the loans, they are in the neighborhood, they are part of the social fabric. But if you have outsiders or you hire people who are not your employees and ask them to make loans, they will certainly make loans. Collection is the problem.
Okay, let's ask Ankur. Ankur, how can you give us a technological solution to collection? Because if that solution is there, then it becomes a very good business proposition.
I think like Mr. Duggal said, the MFI is a great model. That model has worked out very well. And the debt ratio is much easier to work with on the MFI side than on the other side. In terms of technology, the technology can put in checks and balances at each event. So we can go out and monitor at how each transaction takes place, how an alert has to be generated, what are the deviations. So whatever assistance or support the human behavior needs. Today, technology can provide that. We can actually track where the person is. We can track
technology, Ankur, it's the cost. It's the cost. It's the cost of technology, and it's also the cost per transaction of technology. Is that going to make it a bankable proposition?
Let me just make a point here. I think technology's introduction for credit collection has limited applicability. Where technology will make a major difference is in reducing the operating costs. I think